Testing, testing. Good morning, good morning. Hey, Donnie, how you doing? Morning, everyone. Welcome, welcome to Wednesday the 14th. Raj, what's up, brother? Bit of a slow session today. Hey, Lotica, what's up? Alrighty, well, let's get the show on the road here. Okay, so not much has changed since yesterday's close. We have our big gap is still unfilled. The latest sort of larger short position is underneath 5,900. Now, of course, everyone's going to say, JJ, why do you say that the latest short position is under 5,900? Because that's where the bid is in the overnight session. Okay. Hey, Dan, how you doing? Kevin, good morning. Morning, Phil. Hey, Terzi. The the bid, right? What we call in the business the bid, you guys call support, right? You guys have support and resistance. And support is created by competitive buying. Now, the first people to buy a low are shorts who are trying to cover. Now, most people don't understand that because they've never actually sold shorts stock or futures or anything. My job when I was a trader was I ran deals. So I moved market makers around a level 2 like chess pieces to make the level 2 look a certain way, to get people to do certain things. Sometimes that was to trap shorts. Because when you trap shorts at low prices, you can use them as leverage. Now, I'm not saying that somebody trapped these people on purpose, but whether it's done on purpose or whether it's done by natural human nature, the mechanics are still the same. So the low tonight is 58.98 half, and that's where the shorts are currently bid. The profile shape, the range is tight, right? It's a very tight range. It's like a 14-point range tonight. Kind of strange compared to the usual ranges that we've been seeing. that means something. It's an inside day and the range is small. What that means is not that many people want to do business here because there's a gap and then there's another short position here. So if I was a large trader, and hopefully, if I was a large trader, I would have a level of sophistication that I would actually know what's going on, right? Now we're talking people who are trading hundreds of millions of dollars, not trading, a six-figure, eight-figure account. We're talking people who trade a lot of money, who manage what we call other people's money, OPM, right? They know about market structure. And you guys are like, how do they know? Well, it's their job to know, like a surgeon's job to know how to perform a mitral valve replacement, right? Or an orthopedic surgeon's, they know how to do a hip replacement, right? So if you're a large trader and you see that a market is primarily built on short covering, that's not a stable market for you to initiate a size position. Like if I said to you and I put it to you in simple English, listen, I want you to spend $15 million and position yourself long. And you go to me, okay, JJ, what's the market like? Well, I go, it's really shaky. Like, it could come apart at any minute. Would you open up your wallet? Probably not, right? So that's how these people think. So what they want to do is they want to look to see if we do what we call backfilling. And they're more likely to position themselves if we come back and fill that gap, right? Well, that's the thing, Raj. It's different than it usually is. We usually have moves like this, and they're just inventory based. This time, Raj, we have a move that's based on, and nobody remembers this because this hasn't happened in a while. They changed the macro, right? They changed the material events of the market. We have not gone through that. We went through that in COVID last time, right? So this is the first largest macro change and then a change back. So everything's kind of upside down right now, and we don't know what's going to happen. So normally they'd be selling into this. And to honestly tell you the truth, if I was a swing trader, right, and I was long underneath 5,700, I'd be taking some profits here, right? Maybe not all of it, but I'd definitely be taking some profits. But here's the thing with large traders. They won't sell unless there's a reason to sell. And right now, there's no reason to sell. Right? So it's a little harder for us to predict. Right? Now, it's kind of slow, so I'm going to use this morning to try and get a concept over to you guys. Okay? When you're in the business, right, the way I was brought up in this business is that we did not take unnecessary risks with money unless we had a piece of information that was solid. Okay? For example, let me just go through the market and then I'll get to the story, right? Because I'm trying to teach you guys something that hopefully helps you, right? So inventory right now is long. We're looking for a correction to overnight inventory when London opens. But right now, we're not getting that correction. The market is rotating higher. Not by much, but it is. Okay? So when London opens, if we can't take out this overnight low going into regular trading hours, we're going to do this. Do we have news this morning at 8:30? Hey Jerry, how you doing? I think we do. I didn't check, right? Unless we get some sort of a news event, it might be hard to shake this bid loose. You see? So let's see what happens. Okay? Till then, here's our chart. You can see that this is what I'm going on about. The shorts are trapped here. Shorts are trapped. That equals buying. That's why the overnight low cannot get underneath this level, because they're front running the single prints. That's where they're trapped from yesterday. Right? That's what creates a low. Now, we're one time framing up with a J period correction. Let's see what happens. It's slow, it's boring. I'll throw the 1 minute chart up here so you can see. There's VWAP at 5904, 5905. Right? And we're just kind of doing a little rotation in this area here. Okay? Back and forth. It's a wholesale business right now. Not much going on. You can see they're front running VWAP here. So this comes to the point that the chart tells us what's going to happen. The chart tells us there are sellers up here, and the sellers stop selling here. So the market is just banging around in between the bid and the offer. Think of this as a big offer. Think of this as a big bid. Right? And they're just letting us bang around in between. Right? Now, when you work in the industry like we did, we wouldn't just buy a stock. We'd go, hey, you know what? There was a guy, and he could really move paper. He could really move a stock. So when he came and took over a deal, everyone would run to buy his stock. Because if you positioned yourself at 25, 30 cents, you knew he would run it to at least $5. Right? He would always be good for 30 cents to at least $2 to $3. So that's how you would position yourself. Had nothing to do with the company. They could be making donuts, or they could be selling mining equipment, diamonds, gold, drilling for oil. Nobody really cared. All they cared about whether this guy Jamie owned all the stock, and his group owned all the stock, because they'd move it. You drive the price up by promoting, Mike. Right? You drive the price up by not selling. Exactly, the Pied Piper, right? Everybody follows him into a deal. Right? You wouldn't just go and buy any stock that you knew nothing about based on a chart. Now, this is the penny stock world, but I'm going to explain. Okay? Same thing when you were shorting, right? If you wanted to short a stock, you'd get a call from one of your guys who worked at another brokerage firm, right? And be, hey, JJ, we got a 4 million share sellout on XYZ, which means somebody bought 4 million shares of stock, didn't pay for it, there's a margin call, it's being sold out, the guy next to me has the order, he's going to start selling in about 3 minutes. So I'd go, say if the short stock is $5, we'd go and short 20,000 shares. Now this guy would start selling millions of shares, knock the price down from 5 to 4. You cover your 20,000 at 4, make 20 grand. There you go. And then you buy drinks and dinner that night. Okay? This is how it works. Now, we don't have that luxury of that insider knowledge. But what do we have? What do we have that goes psst, psst, psst? We got this. We got the chart. It's not as obvious, but the chart tells us that there are sellers here, and the chart tells us that they stopped selling here. All you got to do is listen to the chart, right? Do you guys understand what I'm saying? The chart is your friend. So instead of trying to predict what the chart's going to do, listen to the chart and then execute. Right? Instead of trying to impose your will and what you want to happen, right? Let the chart tell you what's happening. Then you can execute with some sort of intelligence, right? So all of this technical analysis and everything is all centered around that. But they don't tell you in plain language, right? Nobody tells you in simple language, hey, there's sellers here. So if you buy here, don't expect to get up here because somebody's selling into it here. So everything that we do in our room at the trading syndicate and in our rooms, it has to be based on practical information, right? So if I see stuff like this, now there's no reason for me to look for a trade here because it's chopping around. This is another problem that retail traders face is they don't know when to not trade, when to not do business. You have to understand when to do business and when not to. Because if you don't understand when not to do business, you're never going to make money. You're always going to be losing money because you're going to be doing business at the wrong time. Right? So these are things, as you wake up today and you come into the trading day, this is stuff you want to be aware of so you can make good business decisions. Right? I hope that that was informative and it helps. Right? Give me some feedback. If you guys are awake enough, does that make sense? And it just has to do with how you think when you are in business, right? Just simple common sense, right? I don't know what's going on, so I got to let the chart tell me what's going on. Hey, Moran, right? Because if it doesn't make sense, I'll find a different way to word it. Hey, Perry. And if you have that kind of mentality in your head, because when I was in Vancouver, you know, there were like 300 companies. And how did you know which ones to buy, which ones not to buy? Well, you looked at the person who's running the deal, right? It's really hard to anticipate what's going on, especially since they went to electronic trading, because they've taken the emotion out of the order flow, right? So traders who used to trade by feel, it's made it intrinsically difficult for traders to trade by feel. That anticipation thing, they've made it so difficult, you know? Now, let's see. Can we get a trade in here while we're sitting here and waiting? Yeah, unfortunately, there haven't been trading pits for a long time, Mike, and we can't go by noise. Right? That's how those old floor traders used to trade. You know, when it got quiet, they would anticipate change. Right? There is no noise now. Right? That's why we have setups. Right? That's why we have a trade setup. Like right now, the setup I would look at, what I'm looking for is this look below and fail. But VWAP's a bit of a pain in the butt because it's not letting us get under 5. Or look above and fail like here. That would have been okay. Right? Where you'd short 59.10, put your stop above it, use the levels, and then cover in the middle. Right? Now the other thing is, look how small the range is tonight. So you're not going to anticipate a 30-point trade tonight or this morning. Right? Yeah, unfortunately the floors don't exist anymore. Right? But what is good, Mike, is we don't have to wait 5 minutes for a fill. Right? You know, you put in your order and you're filled instantly. Right? Hey, Mark, what's going on? I mean, when I started trading in the mid '90s, it was on the phone, right? I started when Vancouver was shutting down the floor, so there were a bunch of floor traders in our offices, and they hated it. It was like caging animals. They're used to walking around, right? Now you had to they had to sit in front of a computer. It was horrible for them. See this kind of thing right here? This is horrible to trade. It's tiny, it's choppy, it's crap. Yes, boxes are unpacked, Mark. Back to normal life. Got internet. Boxes are unpacked, right? For the guys who went from the floor to electronic trading, it was very difficult because they were used to doing business face to face. Now they had to rely on a chart. It was very difficult. That's why guys like Jim Dalton would charge people 15, 20 grand a week to teach them how to transition. That was a little bit before my time. So I started when it was phone trading. So you'd have these huge phones with like big speed dials with like 100 speed dials, and each speed dial was a market maker. And you know you'd move your market makers around on your level two, so you could distribute stock. No, Quotrod was before my time. My bias right now is neutral. Overall, wait a minute. Sorry, I'm wrong. Trader X. I'm a little short biased because I know that 5,900 bid is by short sellers or bid to cover, right? So overall, I'm short biased, but that bias isn't working for me right now because the market's moving higher, right? So when I am short biased, and the market's not doing what my bias wants, I have to trade against my bias. Because I said about an hour ago, I said if the market can't break 5,900, it's going to rotate higher. So even though I know that this market is built on short covering, there is no need for the sellers to sell under 5,900 this morning. Because every time the market breaks 5,900, buyers step in. Now, what I'm going to do is watch this 11 area at the overnight high. I also happen to know that after a big macro change, it takes some time for the market to digest the information. How many ticks for a stop would I use? Depending on the trade, Kevin, and the time and how slow it is. So, for example, Kevin, if I wanted to go short here, say if I hit the bid here at 9.5, offered one at 10, right? I would put my stop at 11, right? So I'm short one at 9.5. I'm offered at 10 because I've seen selling at this level before. So that's right. I'm not gonna really spend a lot because I know that we get bids at the K low and the J low. Does that make sense, Kevin? Yes. If a rally is built on thin liquidity, it is fragile. The problem is the people who are running big money, if they don't need to sell, the thing can actually build on itself and get stronger, right? So now, Kevin, I'm short 9.5. Where would I bid the market? If I lose one at 10, I'll be short at what, 9 3/4 on two. There's no reason for me to spend more really than this. I'm stopped out, right? So that's why I don't like shorting the front end of the move, right? No reason for me to short the front end of the move. I'd rather take my pain at 11 than at 14. Does that make sense? Right? And that's precisely why you don't short the front end of the move. What you want to do is you want it to do this and then come back in and then short it. So just an example, right? That's how you manage a trade if you're short, right? And if you're shorting, yeah, and if you're shorting and if you know you're shorting the front end of the move, right? You're basically trying to anticipate the seller. So if you're doing one of those anticipation trades, you really don't want to spend a lot of money when it goes bad. Make sense? Exactly. Now, where are you going to look for bids on the backfill? When the market took that H high, there are people who are trapped short underneath 12. Like say had I shorted here and then averaged up, right? I'd be you'd be putting bids in here and that's where the bottom of these candles are, right? Now London's going to open. Let's see what happens. Let's see if it can hold 12. Right? The overnight point of control is at 4.5, 4.25. We're going to try and move that point of control up now, right? So what I'd be looking for, I'd love to get a 12.5 fill, right, for a rotation up on the long, right? So if you buy, maybe if you pick some up at 13.25 here, right? Put a 15, 15.25 sell. There are sellers here, right? So this is that distribution. You're going to get that back and forth here, right? You're distributing this up here. So really, a really nice fill would be down here at 12.5. Scalp long 13.75, offered at 14.75. Out at 14.75. Out another one at 14.5. I'm just scalping using the micro just to see whether my brain is working. It's the first trades of the day. I got one left, and I'm out at 15. And we got those single prints, right? From 12 to 13. Nice call, Moran, right? Got a little short position here, right? And that's one of the benefits of market profile. It'll show you where the short positions are really quickly. Sound is gone? Oh boy. No? Okay. Sorry, Moran. It's just your machine, I guess. Oh. Okay. Now let's see if we can fill that little green box. That'll tell you how trapped the shorts are. So you guys saw how I was short biased. I did a test short. It didn't work, which allowed me to trade long, right? So when you get stopped out trading your bias, take a step back, look at it, and even before I took that trade, I said, I'm short biased, but it's not really working for me. And then I took a short trade. So you are going to make mistakes. You're going to do things like that, right? Don't dwell on it. Is my sound cutting in and out for anyone else other than Moran? Okay. Maybe just try refreshing your feed, Moran. Thanks, guys. See, look at those bids come in. As soon as it gets down to that 13 area, bid, 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 offer starts to lift, right? No cats, Mike. I only had cats in Canada. You live in Oregon. You guys should have mountain lions there, right? Go get yourself a nice pet mountain lion. So this is pure distribution. Pure distribution, right? Tight candles after a move up, using those trap shorts. Yeah, that means long the backside. So when a market goes like this, Trader X, that's the front side of the sell move. This is the back side of it. So that's where you'd go long, put your stop because you see those sell orders are complete. So you grab a little supply and sell into the move up. That's what we call the look below and fail. Hey, when I lived in Vancouver, I had bears in my backyard. They were great security. This is just distribution, no trade here for now, folks. Yeah, I only use VWAP for exits. I don't initiate at VWAP. In like 2016, 2017, I found I could initiate at VWAP because it was a more stable market. But in these markets, the order flow is a little too. I don't know. I don't seem to get it right. That's why I just use. I like fixed levels, right? I like a fixed level because then I could really see that. Oh, look at that! You know, we dipped underneath it and we came back up, right? VWAP's always doing this, right? So it's like hitting a moving target. It's great for getting out of a trade. Let's see if we can take out the 16s. Little stop run. That's where you get that quick spike up and back down. The next upper stop is the previous day high, so that is something else. The short squeeze continues, folks. The short squeeze continues. So what we're going to try and do now is we're going to try and take this inventory here and sell it up here. And we're going to use the shorts who are trapped to hold the market up so we can distribute up here. Now that point of control is 2,000 contracts, 2190. It'll be a while. And if it's slow, it might just kind of go like this, as you see here. Back and forth, back and forth. I would love to see a nice liquidation. Not because of my short bias, but I'd like to see a nice liquidation so we could get some better price action. How do you know that shorts are trapped underneath 5,900? Because that's where the bid is. Who else would be buying under 5,900 at 3 o'clock in the morning in New York? No one would be buying 5,900 in size at 3 o'clock in the morning for a long. Also, I happen to know because I used to sell shorts product, right? So you kind of understand the mechanics of a market. So when a market sells off, Avnish, the first people to buy are shorts. Why? Because they're closing a transaction. It's risk off. The second people to buy are the wholesale longs because they see the shorts coming in and buying. So now they know they can take in some inventory. Then retail, right, and initiating longs. They're the third set. And the fourth set of buyers that create this big green candle are the people who shorted down here. The smart money shorts cover first, then wholesale, then retail, right? The shorts who shorted underneath 59.10 create this big candle because they all go to buy at the same time, and the offers just magically lift. It's just simple market mechanics. It's the mechanics of order flow. And when you take companies public and you sell a couple of 100 million shares of stock over a 2-year period, and you create a chart and you create a market, you tend to understand how markets are created. So I've been lucky that I have that perspective where you come from the creator of order flow as opposed to people who are trying to figure it out. Helps you understand the perspective. So here we go, creeping higher. There's no reason to sell lower because holding price, when you hold price stable like this, it brings in buyers. That's just human nature, right? Price stability gets people to go long. Yeah, so the sequence of sellers is similar. So wholesale sells to people who are buying, right? So I've got 1,000 contracts for sale, and all you guys come in to buy, say, above $6. So I'm selling, I'm selling, I'm selling, I'm selling, I'm selling. And then you're not seeing 650, you're not seeing 7. So you guys start to get nervous and start to sell. As soon as you start to sell, I sell underneath you. So if you go to sell at 5, I go 490. You go 490, I go 480. You go 480, I go 470. And eventually I flush you out because my cost average is $2, your cost average is 5. So I'm going to sell you product at a high price, buy it back at a cheaper price from you, and then sell it at a higher price again, just like a used car lot. So trap long sell first, right? They're the ones who start to panic and break a level. And as soon as that happens, wholesale knocks it down, buys back their position at a cheaper price. And that's how liquidity is provided. That's how you provide liquidity, Mike. When a market falls, the trap shorts are the first to buy because they're closing a transaction. It's risk off. And they have to buy size, right? So when you're short and you need to cover size, right? When you're short and you need to cover size, you got to buy it where you can, not where you want to. If you're short 500 contracts, right? And hey, maybe you want to buy them at 59.11, but you might have to buy them at 13. Is it possible to identify what? Sorry, Luke. Now, the nice thing about how we trade is you don't have to worry about a lot of the details, right? You do the look below and fail of a level, right? Look below and fail. So what those trades are based upon is the market has sell orders, takes it under 13.25. When those sell orders are completed, the market goes back up. So you buy some here, you put your stop here, and then you put your sell order at the next level. So it's really simple. You don't have to worry about who's doing what. You look for this. There's your confirmation. There's your risk, right? Exactly. See, there's a business reason for the trade, right? And I'm using this as an example here. So if the market's sell orders take price under 59.13.25, those sell orders are now completed. The market regains that level because it's looking for product. Okay? When it goes looking for product, you grab some. Here's your insurance policy. So this is where you buy your inventory. This is where you insure your inventory. So now, if somebody starts selling at 12, 11 and a half, that invalidates the business reason for your trade. Right? So your business reason to go long here means you want to sell it here. If someone's selling it underneath 12, you got no point being long. Right? You have to protect your capital and get out. So you're long, stop, first target, and as soon as you buy your product, you put your sell orders out. So when the market goes up, it takes you out of your position. That way you're not chasing it and moving your stop, right? You buy your product, you're insured, and then you put your sell orders out so the market takes you out. The simpler the better. Why do you need it to be simple? Because I guarantee you, when you're trading live, you will not be able to think about too many things. So you want to train yourself to do this automatically. That's why people like to automate this stuff, because they're too lazy to do 1,000 trades and learn how to do it manually, right? But I say don't automate something unless you're profitable. I'm not attacking you, Mike, but you got to do the work. Otherwise, you don't get a feel for it, right? You got to go stick your hands in the dirt, baby. You can't you can't expect Elon's robot to do the work for you, right? Otherwise, you're never going to feel that order flow. Have a good one, Perry. Thanks for stopping in. And that's what we teach in the room, right? You want to keep your trading analysis simple. Where are the sellers initiating? They're initiating right here. Where do they stop selling? Right? Do they stop selling at 12, or are they forced to sell it back down to 10? Right now, I can't tell until we get there. So say I miss the short. There's no point in me taking the trade now. Wait for the next trade, right? Yeah, forced to sell lower. Nobody wants to sell lower. You're forced to sell lower. Nobody wants to buy higher. You're forced to buy higher. That's when they say buyers are in control. That's ridiculous. The market's going up. Sellers see buyers. They're in control. They're getting better prices. Nobody thinks about distribution. Accumulation versus distribution. Well, distribution happens at the top. Accumulation happens at the bottom. You know, you go buy 1,000 units of something. You want to sell it at a higher price. Well, I missed the short. I should have been shorting that with my stop above here and now covering. This is the back side of the move. This is the front side, right? So now what I'm looking for is maybe a look below and fail of 10. If we get back underneath 10, a short down to VWAP. I'm a little slow on the trades today. Let's see what's the next trade here. It's a little slow. I'm short 9.5, stop 10.5. I'm going to put a bid in at 8 and see if I get a fill. If I don't get a fill at 8, I'll move my stop. I'm just screwing around on the micro. See if I'm right. 9.5 short. Oh, they're not filling me at 8.25. You dirty dog. Filled at 8.5. It is hard to trade while coaching because I like to focus. I can make markets in 8 different stocks simultaneously and have a conversation with people because that's what I did for 30 years. But retail trading I find a lot harder. You have to focus. If I'm not getting a fill, Mike, I'll take the offer. Right? If I'm short and my bid's not getting hit, I'm gonna grab the ask and just get the hell out. I'm not gonna be a dick for a tick. Right? I'm always trying to carve out a little bit out of the middle. I don't want the high, I don't want the low. I'll take what I can get from the middle. Now that trade is gone, it's forgotten about. I could have done this, I could have, should have, would have. That transaction is over, right? So if I'm doing business and I'm selling, I don't know, if I'm selling oranges, when I sell you an orange, I'm not going to think about that sale after the sale is completed. Oh, I could have sold the orange for more. I'm concentrating on the next sale. I'm concentrating on the next trade. Right? That's why traders are like sharks. They just keep swimming. Right? If I was short a couple of more contracts, I would have liked to cover some at 7. But I want you to think like the seller, Mike, not the buyer. Right? I want you guys to think like the distributor, not the consumer. Because that's who runs this business. Yeah, if you can't get filled on the bid, Moran, you got to take the offer. Right? Oh, thanks, Mike. Right? Think like the seller, not the short seller, the seller. That's pretty much it for me, and we're back to the garage. Right? So if this was a used car lot, right? We had used cars. Customers came in. They drove them. Couldn't afford their payments. Now we're back to the lot. Right? Yeah, you got trapped longs above 5,900. Anyone who's long over 59.07 3/4 is trapped, and we are back to VWAP. Right? Oh, we're under VWAP now, actually. There we go. Now, this is where it gets interesting. Do we have enough oomph to take out that overnight low? Right? So we did not spend enough time up here to move the overnight point of control higher. Right? There weren't enough buyers, right? Or there wasn't enough time spent up here to move those 2,000 contracts up. Well, now, Avnish, we've got more inventory. We've trapped people at higher prices. I'm just curious. We don't have to take it out. I'm curious to see if we can. I'm not tied to the outcome. I like to observe things and ask questions. That's how I learn. Right? So if I'm always in a trade, I'm never going to learn anything because I'm always going to be tied to the financial outcome of that trade. That's why retail has trouble, right? Because they don't know when to sit back and watch. Or if they're watching, they feel like they're not doing anything. That's hard for them to overcome, right? If you can approach the markets from a view of curiosity and actually enjoy watching things and learning, it'll make you a better trader. Get curious. Don't be greedy. Get curious because what curiosity does is it gets rid of that short term greed that gets you into trouble. You want to be long term greedy. Thanks, everyone. Come join us at the Trading Syndicate. We'd love to see you. I'm JJ. It's vwaptrader1 on X. We'd like you to subscribe to the channel. That'll help us keep the algorithms happy and fed. And you can use that discount code at the Trading Syndicate. Right now we charge it's like 50 cents a day. Where it's like $39 or something like that a month. Give us a shot for a month. There's no obligation. And I promise you'll learn more in a month with us than 10 years anywhere else of information that you can use in a practical manner. Thanks, everyone. Have a wonderful morning. We'll see you at 9 a.m. Eastern Time. Bye for now.